You know, some would say the bloom is off the rose. Think about this. In recent weeks, we've seen a collapse in the probability of stock market prices going higher. That's according to that University of Michigan sentiment report, which has been really overly pessimistic. But then again, CEO sentiment fallen through a trap door. And then there's global fund managers. They are extremely, look at this, folks, extremely underweight U.S. stocks. The experts are now so dug in on their opposition to this rally. In the meantime, though, look at this. Names changing hands above their 50-day moving average. That has gone parabolic. Now, my next guest is taking a page from Sergeant Emil Foley. You might remember him from An Officer and a Gentleman. So although we've had this amazing V-shaped recovery and it's defied all of Wall Street's conventional wisdom, she's dubious. In fact, she says, is this what you call climbing a wall of worry? Let's bring in Stock Swoosh founder Melissa Armo. So you're not impressed by what you're seeing right now, Melissa?
Well, it's not that I'm not impressed. And let me just preface this. I'm bullish on the U.S. over the next 4 years under a Trump administration. So let me just say that. I think the tariff issue is a problem for short term this summer. And even though we're almost at the highs, in my opinion, we already should have been over the highs. In a normal market, we would have already been over the highs. When was the last time, Charles, that Apple was in a downtrend and the QQQs and the overall market was in an uptrend? I can tell you when, never. So that's concerning. You're not having all of the sectors participate. Yes, you have the banks that are running out. Yes, you have the SPY. And you have different things. But it's not like the good old days when you had a very, very bullish market and everything was running up.
That sounds bullish to me, that if a name like Apple was dragging, but the overall market can still trade higher, isn't that what we want, a broadening of the rally?
Well, I think that we could sell off again because, again, remember, we collapsed so quick, so fast, out of nowhere. And I'm saying that could happen again. And if it does, we could fall and break that April 7th low and go even farther down and then have a bigger rally up. And then maybe I'd be bullish with you.
What would be the catalyst to pull back, though? Like just failed trade talks?
It could be anything. Look at the world that we're living in right now. It could be something with Russia and Ukraine. It could be something where the Fed just says, no, we're not lowering rates at all this year, which, by the way, I'm not into the camp that they're going to do that. So even though Trump and the administration like to think they can control everything, and Scott Bessent goes on TV, I call it the Scott Bessent show. He goes on, markets love him, he calms everything down. He does not control interest rates. He does not control the bond market.
I just want to let the audience know, in just a very short period of time, maybe a minute or two, President Trump is expected to come out and speak. We are going to take that live, so don't go anywhere. Real quick, though, you do have some stocks that you're bullish on.
Yeah, I like Amazon. That's rallying today. Netflix hardly fell when we had that tariff issue, never broke the 200-period moving average. Netflix looks like it's on its way to 1,300, 1,500. Again, remember, earnings season starts in July, and Netflix is one of those early earners that reports the first or second week. So I really like Netflix as well, and of course, the banks. Some of these very strong banks are climbing up. They're almost at the highs. I know the market's almost at the highs. I'm not debating the fact that the market is in an uptrend. I'm saying that I'm not sure we're going to hold it because I really don't see enough buying, really strong buying that you normally see. A continuation move. That's what I want to see. Some follow-through.
How do you measure that, though? Volume? How are you measuring that?
The volume's been low. The volume's been low. In my mind, we've been in a range. We've been in a tight range the whole month of May. I want to see a breakout. I want to see big, fat, green bars. Kind of like we saw, remember last week we saw in Meta? Meta had a huge bar. Green up, rallying, got bought. That's the kind of thing I want to see 1, 2, 3, 4, 5 days, a whole week. I want to see the market shrug off a tariff tweet. I want to see the market shrug off a Musk and Trump debate. I want to see the market not care about those things. The problem is we had earnings season, and so many companies really didn't want to give guidance. Where does that leave us for next earnings season? It's going to be the same thing.
Well, I will say this, though. More companies gave guidance than Wall Street thought would give guidance. No, really. There were only a handful that didn't, and some of them actually gave pretty good guidance, you know. I think this is a great discovery process. Think about the retailers last week. Dollar General was higher. Five Below was higher. You know, Signet, the jewelers. That's the ultimate discretionary thing. No one needs to buy a diamond or even a fake diamond. Those stocks were higher. Some of the other names got hammered. So I love the process. At least, you know, what earnings season should be is a discovery process. But you're right. We've got a gulf right between this some inflation data this week, the next earnings season. But to me, the bias is to the upside. What if we break out? What if we start ticking up?
It could be a failed breakout. Even if we're probably going to break out. Let's face it. I mean, this is a slow week. Next week's the Fed meeting. We could break out this week, but it could go and then fall off. And I'm saying cautious.
For your clients, though, are you long? Are you short? Net?
It's a mix. Just like I gave you the picks, Netflix, I love long. Amazon, I love higher. Tesla, I think is lower. Apple, I think is lower. UNH, I think is lower. JPM is higher. So this is what I'm saying. You got to be short and long some things. I wouldn't go hog wild, risk the farm in longs right now because you could get smacked and hurt. Again, going back to the numbers, going back to inflation, we're talking about a possibility of recession. I don't know if we go into recession, but I will say this. If the tariffs hit and prices go up, it's going to be retroactive. So they're going to say the numbers are great, but then you don't see that in the data till after the fact. That could hit in the data later in the summer, later in the fall. And that's also one of the reasons why I don't think Fed is going to do anything right now. They're not even going to make any moves right now. They're going to wait and see, and they always act too late anyways.
Well, one thing we did see, though, was speaking of the Fed, New York Fed came out, inflation expectations across the board came down significantly. The markets picked up a head of steam on that, and the 10-year yield starting to pull down. Is there a place on that 10-year that gives you comfort? Would it be like 4.3, or does it need to go like the 4 before we can kind of say that inflationary concern that the coast is clear?
Because even if it does, it may not stay there. Because look at how wild the bond market has been. You know what I mean? I mean, this is why the market hasn't gotten over the highs yet. People are, yes, they went long the drop off. Yes, they went long there. But after that tariff pause day, the day we had that monster rally, it's been a little pitter-patter rally to me. No, not everyone has been participating, and you've been discussing that. You're not seeing all the funds come in. People are very, very cautious right now.
I love that the big boys aren't in, the big boys and girls. I love that they're going to buy
But that's the only thing that's going to move the market up and sustain it. That's the only thing that's going to sustain a rally that could last for the next 6 months throughout the year.
But they're going to have to get in at some point. If we get to new highs and you were short this market already, and you have to explain to your clients why you're getting shellacked and everyone else is making money, I mean, you have to at some point, join
Well, I'm not short the market, but I'm not long it. I'll just say that. I'm short different stocks. And again, Apple is a great example because I've never seen that contrary to the market trend. And that is going to get hit with tariffs. I know the meeting's going on right now with China and the U.S. delegation. But why does anyone think that that's going to be resolved in a couple of days or a week or even by Trump's next pause deadline? Is he going to hold that deadline? Is he going to extend that deadline? Nobody knows. And I think the markets could sell off this in the next few weeks because it could be scared about it.
I don't think the market's afraid. Otherwise, it wouldn't be up right now. Now, you can, everyone, no one technically knows, but the market is smart. When I first started on Wall Street, we used to always say that the stock market was smart. The only time I hear now that it's not smart is when it's against someone's book, right? The market has already told us it thinks they're going to get some resolution on this tariff thing, one way or the other, and it wouldn't. But
what about interest rates? The market thinks that they're going to lower interest rates this year. What if that doesn't happen? You don't think the market's going to react to that?
I don't know that we have to lower interest rates if the economy holds up. These corporate earnings were at 279. They collapsed, I think, to like 230. We're at 280 now. After this earnings season you talked about, earnings expectations are higher now than they were pre-reciprocal tariff day, Liberation Day. It's absolutely amazing. Melissa, let's leave it there. Folks, Trump is going to be speaking at any moment. We'll bring it to you, even if we have to break in the commercial. We'll be right back.